Hey, what's up, Dan? How you doing? This is Isaiah, man. Sorry it's been such a long time since I made this video for you, but I just wanted to make it for you, man, and kind of give you an idea of how I trade the ATS system. As we both know, it's a very profitable system as long as you have a profitable, um, if you have a profitable way of trading it. And I find, I'm still working on the exact accuracy of this trading system, but I found a lot of success with it, man. And maybe this could work for you. I did change a couple of things, with this system, but the premise is actually still very similar to what, Shane and Wade talk about with the ATS, where it's the three market cycles, right? Contraction, expansion, and then the trend run. So, in this video, I'm going to definitely try to keep it as short as possible, man, but definitely keep it maybe under 10 minutes, and just go right into. So, one thing I want to pull up, which is kind of the premise of this video that I'm gonna make for you, is I'm gonna show you something really quick. Which I assume you've seen it before, but how I trade using the ATS system is I trade based off the high and low of the day, right? So as you can see, we could go to the daily chart, and we are gonna go to a bar chart. So we're gonna zoom in on the bar chart really quick. So as you can see, each one of these candles represents a day, right? Because this is the daily time frame. So as you can see, the market opened up right here, came down 27 pips, and then came back up, right? And then it came and closed right here. As you can see, you'll want to take a look in the ATS to see if this is a box or if it's above expansion going to the upside. So if it's above expansion going to the upside, what we're looking for is to catch the low of the day, right? So as you can see right here, came down, price opened, came down here, went back up, right? Open again, came down, went back up, open right here. There's not really a whole, this right here probably is probably a new expansion. As you can see, a new day just probably went straight up. But as you can see, price came down, right? Opened, came down, came back up, made a new high, right? It opened, came down, went up. Open, came down. This could have been like a losing day right here, but as you see, the green days, it opens, comes down, it goes up, closes above, opens, comes down, closes above, opens, goes down, closes above, opens, go down, closes above. So as you can see, as long as price is above expansion, right, we're going to be looking to catch the low of the day. And that's where you could pretty much go the heaviest if you like, right? Obviously, some days you're going to have losing days, so definitely pay attention to risk management. But one way that we can not successfully, but I would say increase our odds of winning a trade as long as we're looking for a low or high of the day, because as you can see, each day there's a high, each day there's a low, each day there's a high, each day there's a low, each day there's going to be a high, and each day is a low. So that's very important to kind of just wrap your head around, because that's going to be the premise of how we're going to use the ATS system, and that's how it's going to be very, very profitable for you to use it, right? So one of the ways that I use it, I'll come back here, go to my time frame. So I have a couple different charts. I have a naked chart, my default, which my default is going to be my naked ATS chart, right? As you can see, my boxes, my lines, Heikinashis, all the same thing. But I have another chart right here, and it's my entry, my 15-minute entry chart. So the charts that I use I use the daily, right? I want to get my daily direction. I want to be above or below expansion, right? And I want to have the same colored Heikin-Ashi candle, right? So if this is green, we're good. That means that we're going to be buying. Also, I want to go to the H4 and make sure I'm above expansion, not in a box, because you do get what you get 6 candles in a 4-hour time frame, right? So as you can see, some of these you can start seeing very little momentum, right? This could have been what on Sunday, or this is Wednesday. Let's see, Sunday, Monday. Yeah, so obviously you want to make sure that you are in agreement with the directional bias on the daily time frame, right? And then your second, or my third chart that I use is I use a 15-minute for my entry, right? So the way I use my 15-minute is I have a 15-minute entry time frame. So One thing that you have to realize is that, come on, bruh. Oh yeah, I'm probably here. One thing you have to realize is that the ATS software is actually very, very good at, you know, I mean, it could be a buying or selling signal, right? As you can see, you could use each one of these lines as an entry for your, for your trade. But the way to actually really benefit from the system, man, like the way to really, really do it is, as long as you know you're trying to make the low of the day, right? I wouldn't trade Sundays into Mondays, right? Um, I don't trade those days, but you could do anything you want to do. But as you can see, let me go here. As you can see, price. All right, so let me tell you the little background of this chart. So on this chart, you see that I have a gray box. So So the way to really take advantage of this system, I'm sorry, is to really get involved with having a certain a time frame where you enter in the trade, right? Like one thing that Wade and Shane tell you to do is you could always buy into the dips, right? So what you could have done is, uh, I mean, if you got an entry right here, you got a counter reversal trend move, right? You could buy into this, and then eventually it's gonna go up. But one reason why I don't do that is because sometimes, you don't know how far it's going to go down, right? You don't know how far this dip's going to be. It could come all the way down to this expansion. It could come all the way down to this liquidity line right here. So if you got in right here and you built positions all the way in this, you're going to be minus, 60 pips if you built a position every 10 pips, right? Which you could do that. You could do that, and it eventually could come back, right? And it could come up here and break the low or break the highs. But what you want to do is you want to realize that each day there's going to be a low and each day it's going to be high. And once you really dive into this, you want to make this little box, because anything within this box is not only going to increase your odds, but it's going to allow you to really ride the momentum, right? Ride the volatility away from expansion. As we both know, when you get these expansion lines in your directional trend, it's a good indicator that it's going to most likely take off, as you can see. So this gray box right here is actually this is the London session. So I have it set. So I have a couple indicators. I got this traderbotmarketplace.com. I got this free indicator here that gives me the exact days and times, right, based on my time zone. So I actually integrated this with a session clock that operates based off when London opens, right? So London, my time, opens up at 1 o'clock, right? So that's when I'm going to start getting my boxes. Also, you got to be aware of what days you trade, right? Because usually Sundays into Mondays and then Thursdays into Fridays, volatility is just not the same, right? There's a lot of other things that happen, but I mean, usually, a lot of different news comes out on those days, and usually the market's a lot slower on Sundays into Mondays, right? Depending on what pair you trade. So as long as you trade all the majors, I think you should be good. But I'm kind of running out of time, so I want to just give you a backstory. So as you can see here, we have what? We have from the 7th, so to what day is this? This is the 5th, so this is Sunday. So let's just go back from Sunday, right? Let's go to Monday, the 6th. Let's see if we could go back that far. So, oops, oh man, it's probably loaded really quick. All right, so how many boxes do we have? Nope, we don't have that many boxes, so let's add those boxes really quick. $30 gives us 30 days, right? Obviously, this is in hindsight, right? This happened in the past, so it's obviously just a lot easier to point out. But with that being said, I'm going to show you, we're going to start on the 7-6. So 7-6, let's see, 7-13, 7-8, 7-7, 7-6. So here's 7-6 right here. All right, this is 7-3. So what day is this? This is Friday into Sunday into Monday. Monday into Tuesday is over here. So as long as your daily, right, so we're right here. This is the 7th, This is the 6th. So what is the 6th? Sunday. So the 7th. So what we're gonna do is right here we have the 7th, right? So the 7th Asian opened up, right? As you can see right here, it came out of expansion. It's actually pushing up. The only really level that we're really going to be trying to pay attention to is this one right here once it gets up here. But as you can see, it came down, it kind of stalled a bit. It kind of retested this liquidity line, but didn't come all the way through. And then on the 6th, it started shooting up, right? So from this day, it actually just came right out the box and came straight up. So if we go to the 15th, I mean to the 7th, as you can see, price, this is the day where it dipped back down right here and tried to test that liquidity line. It just had no go. And as you can see, since on the daily we were up in expansion, right? So this could have been a day on the 4 hour that it was probably in a box. So let's see real quick. Let's double check. So the 5th, where's the 5th at? So let's see the 5. So as you can see, this was what that Friday into Sunday. This is the 5th. So you get those little, I mean, it's not in the box, but you do have that contraction right here, and then it just shot up. So what you want to do, or what you want to pay attention to, is you want to look on your daily time frame and see what direction you're in. So we're in an uptrend, so we're going to be looking to buy the low of the day, right? So on the 6th into the 7th, we had that dip down. On the 15th, which is on the 3rd, or on the 5th, which is right on here, and then it shot up. What you could have done is, obviously, this right here is the low of the day. I probably want to trade this because, as you can see, I mean, I guess price came down and made another low, but usually the low of the day looks something like this, right? It comes down, it takes out the liquidity that's going to be founded on the A's in session, right? Because a lot of people, like Wade said, like to buy the breakouts. So they're going to put like a sell order right here. They think it's going to go down, which it is. They never get out the market. They lose all their money here because price goes up, right? So this one you probably could have traded. I mean, one thing you could do is how I enter into the trades is, as long as my daily direction is in a certain direction, my 4 hour is in the same direction as my daily, then my 15-minute, I'm going to be looking for London to start. So I would have missed this whole move right here, right? I would have missed this whole move. It came up to this liquidity line. And I most likely wouldn't have got into this because I would have felt that, because obviously I wouldn't have seen any of this right here. So I probably would have felt that, this liquidity level right here is probably going to come back down. It could come back down to test this expansion on the daily right here, right? Could come back down, test this level again, which it did right here, right? And then it shot back up. So I mean, I could have felt that this was a day just because it came right out the box right here. It could have came back up, tried to come back down off of this day right here, since it made another high, right? It beat this day's high. The market makers had some money right here, so I would assumed, if I didn't see all of this, that most likely the market would have came up, pushed up at this level, and then shot back down, right? And then it would have contracted or went into a box and then came down and then went up, right? So I wouldn't have traded this. But you could have traded it. If you got an expansion, so how I enter into the trades is I enter based off of getting an expansion into my directional bias in the London session, and I trade from 1 to 8. So 1 to so anything past 9 I wouldn't get into. I won't get into the trade, right? So as you can see, if you would have gotten to this trade right here, it would have won. It would have won, right? What I do is, where's it at? Dang it, 29th. What I do is I base my entry off of this candle. So from here to here, it's what, 11 pips. So this is Sunday into Monday. I don't trade Sunday into Monday anyway. But let's just say I did. I'll put my position here. It's 24. It's 12.4 pips, right? So I would try to get at least 2 to 1. So I would try to get my risk 1 to make 2, or 1 to 2, I guess. I don't know how it's said. So I would try to get 24 pips, which you would have got stopped. I mean, you would have got your take profit would have been hit right here, and you could have left one runner, right? But I like to be in and out of the market once my take profit's hit. That's good enough for me because I like to compound my accounts, right? And how I enter on is, when I normally enter, is I enter in every 5 pips, right, from this expansion, right? There's some times where it comes back down. And basically I put my stops is if I enter in right here, right, let's say I enter at 10, then my next entrance is going to be, 5 below or 5 above my stop here because I entered in 5 above my entry here, right? So let's just say you entered here, you made some money, you got out. So in this day, we're actually expected to trade the low of the day, right? So we wouldn't have traded any of this. This is all Asian session. Came down to London, right? And then in London, we're looking at this box. We never got an expansion. Yes, we got a new low, right? We got a new low. This low, we got a new low for this day, but we never got an expansion into the longer time frame, right? Or until our directional bias. So we wouldn't have traded this. This would have been voided. So in the next day, as you can see, this was a dip down. We would look the next day, we see, was it still green, which is probably this day right here. It turned red on the 10th. Let's see if that's the 10th. This is the 8th. So we would probably need to look at our 4-hour. So let's see where the 8th is. So this is the 9th right here. It came up. So 8th. So we're still good. So we'll be looking for an expansion into the higher time frame. So right here is the 7th into the 8th. Tuesday into Wednesday. What we'll be doing is right here at 1 o'clock. We got our first expansion level right here. Right at 1, we got our first expansion. So from here to there, you probably could have taken this. I probably would have taken it. Right? It's 18.7 pips at our stop. So we'd be trying to get at least 18 to 30 pips, right? So this one, we would have got stopped out, right? We would have got stopped out. So we wouldn't have made any money here, right? So that's one. So let's just say this is our first trade of the week, right? So as you can see, this level wasn't broken again, right? It wasn't broken again. Came back down and retested the low again. It didn't break it. So, I mean, with me seeing that plus a new expansion, I probably would have went heavy right here. I would have went really heavy right here. And I would have tried to get whatever this was before, right? So this was that 18 pips. So I'll try to get at least 30 pips, let's just say. So not only that is my stop is still going to be right here, right? Oh, you know what? We didn't even actually get stopped out. We didn't even get stopped out, actually. So we would have came back. It would have, came back to this level, didn't break that level. So this trade actually would have been valid, right? It would have been valid. And then we got a new expansion to the upside, right? We got a new expansion to the upside. So we could have just added another position, added a couple more positions, and still got our 30 pips, right? So our 30 pips would have been right here. So we would have been out, and there's all this to trade, right? So the next day, which is Wednesday into Thursday, we'd be looking for another short position, right? So we'd be waiting. So we wouldn't have traded this, right? Even though we got an expansion, then come down, it went up. Great. This is still Asian session. As you can see, Asian made the high of the day, came back down. We probably would have got into this, right? Because it did come down past the low, right? This was the previous low of the day, right? So it came down. We have, we got this low right here. Take out the Asian range, and then it came back down. Then we got an expansion line into, so we would assume that this would have been the low. So right here to here is 17 pips. So we would try to at least get 17 or at least 30 pips. So we would have got stopped out right here. So this would have been a losing trade, right? So this one would have been a losing trade right here. So that would have been a loss. But on this day, this is the 9th, right? So most likely this is a red day on the daily, right? This was probably this retest right here. What is this, the 9th? Yeah, so this would have probably been the retest of this level here, right? And if you go to the 4-hour, we would have seen this ahead of the time. So as you can see, this is the 12th. Let's see, the 2nd. So right here, right? So this turned red. So we're automatically out of this trade because it's not green yet. Even though it is above expansion, it is not green, right? So we're out of this trade. So we wouldn't have took this. This wouldn't have been a day that we traded. So we probably wouldn't have lost money here because we would have did our analysis and would have noticed that the 4-hour is red, meaning that it's returning back to expansion, right? Most likely that daily is going to turn red as well, right? So we wouldn't have traded that. So the next day, right? Next day, we see that price came down, touched this expansion level, didn't break through it at all. So price is green. So this is the 9th. Most likely we're going to have a green day beginning of Sunday, Monday. So we wouldn't have traded this Sunday, Monday. We wouldn't have traded this because this was what Thursday into Friday, Sunday into Monday right here. So we would have traded this day right here, right? So this is what? This is the 13th into the 14th. So 13th into the 14th is what right here, is right here. Let's see, 13th into 14th is right here. So it's above expansion. We got a new expansion line right here. Yes, it is a little has a little contraction right here, but it's still green above expansion. So we'll be looking to buy the low. Right, so then we come down here. So this is what 13th into the 14th, which would have been this day here. So this day here, we're going to be looking to buy the low of the day, right? So in the Asian session, as you can see, we wouldn't have traded any of this, even though we got some expansion lines. We're only buying expansions into the daily, right? So as you can see, we would enter in right here. We got our first liquidity line expansion into the low of the day, which is right here, right? As you can see, it didn't take out this liquidity line, so we probably would have went super heavy right here, and we would have tried to at least get 2 to 1, right? So you come back here, put your stop right here, right? So 20 pips, so we try to go to 40, and it would have got, so we went into another box. When it goes in the boxes, I get out. So we probably would have got out. Let's just say we got out right here at 20 pips. All right, so we still made 20 pips plus, you know, five positions. That's $100, right? Give or take, depending on how you entered into the trade. As you can see, it went into a box. Since it went into a box, we would be waiting to see what it does outside the box, right? If we would have got a sell liquidity line, obviously it would have avoided the trade, right? As you can see, it came up to this liquidity. Obviously, there's always going to be some type of resistance or some type of stalling when it gets to liquidity lines, but we're going to wait to see what comes out of this box. As you can see, it shot right out. We got our first line here, which, you know, if you're pretty conservative, you probably wouldn't have took that. But you could have got in here for at least 1 to 1 just because you know how the day went up. So this is 22 pips. So you're going to try to at least get 22 pips. So would you have got it? You would have got it. You would have got 23 pips. So you would have got it. If you even hold at this with your stop here, I would have probably put a trailing stop, right? Or you could have just got out since it's outside the box, went outside London, outside your trading time, which is 9. So let's just say you got out, it retraced, you got out right here. So from here to here, it's 12 pips. So for that day, you would have made 32 pips, right? Let's just say 38. I mean, yeah, 30. This is 20 plus 30 plus 12. Yeah, so 32 pips, right? So the next day, go to the next day, which is another green day, the 15th. And we go to the 4-hour, the 15th on the 4-hour, which is here. Nothing in the way right here, right? Strong, strong. Or no, hold up. Let's see, the 15th. The 15th is over here. So we have strong uptrend, no indications of any type of bearish move, right? So we're going to be looking to buy again, right? So we're going to be looking to buy the low of the day. So say we got in, you know, so far we only lost 1 trade. You got in right here, right? Your stop was right there. You got 20 pips there, and then you come here. So right here, we're going to be looking to sell the low of the day, right? On the 15th, which would be on the Wednesday. So we wouldn't have got into any of this. And then look, we could have got into this trade, but we missed it because look, we don't trade anything in Asian. So we wait for the box. We would have been waiting for an expansion line, but as you can see, price came down, dipped, didn't touch this expansion level right here. So this could have been entry right here. This could have been the low of the day, right? Because this would be the low. Yesterday came back down, didn't do anything with this liquidity line. You could have went in, you would have had really low risk, right? So say you got in right here, your risk was 8 pips, right? 8, so you're trying to get at least 14. You would have easily got that. You would have got, what, this day it went all the way up to 53 pips, right? And you could have left a runner. So this could have been a winning day as well if you're a little bit more aggressive with your entry right here, right? So the next day, since we're still looking to buy the low of the day, right? As you can see, price came down, went into the Asian range, right? Kind of chopped around for a bit, and then it goes into London, right? London opens right here. You get your first expansion line right here, and then this is what 12 pips. So you're gonna try to at least get 24. So as you can see, you would have got stopped out. So this one would have lost, right? This one would have lost. Oops, this one would have lost right here. Bam. So what you're going to be doing is obviously that wasn't the low of the day, right? This one right here wasn't the low of the day. So what you're going to be doing is you're going to be waiting for your next expansion line. So it took out this liquidity, So as you can see, you start seeing these spikes coming down. So you're seeing some type of resistance coming down, right? So then, boom, you got your next expansion line. So this one's even bigger. So 18 pips, you're going to be looking to get at least 30, right? So you would have easily got 30 pips right there. Bam, you would have had your first win. So yeah, you lost 17 plus 30 plus a couple positions, depending. I mean, it just depends how your money management is. I mean, you could have really took it really hard right here because guess what? Once it hits the low of the day, it's not gonna break it. It's not gonna break it that day. It's only gonna go up from there, right? So this one could have been a winning trade, depending on how much you lost here, right? If you entered in sales, so let's see, 12 pips. You entered right here. Your first, you probably had 3 positions open, right? So 3. So you probably would have lost what, 15. Let's see, what is this? You probably would have lost 20. So you probably would have lost 30 pips, right? Depending on how you stacked your positions. You probably would have lost 30 pips. So say you got in right here, right? And this is 20 pips, so you're going to try to at least get 40 or 30. I don't know how many I said. You could have got 40, kept a runner, right? But you would have entered in 5 positions. You would have been in a couple different positions. So 70 positions. 1, 2, 3, 4, 5. You could have entered in 5 positions right here. So you would have made at least 100 and something, 100 plus pips this day. Minus 30, so you've been in 70 pips, right? So same thing. We go back here. This is what, the 17th, which is a Friday. I usually don't like trading Fridays, but let's just see the 17th, which is here. So it's another green day. 17th on the 4-hour is where? 17th is here. So we wouldn't have traded this. It's in a box below expansion, right? We wouldn't have traded this. We would have waited for a new expansion or to break through this box, right? So we wouldn't have traded this. We would have not traded this until the 20th, right? The 20th. We got a nope. We wouldn't have traded that on the 20th either. We would have left this whole thing alone until we got this next expansion right here, right? Which is on the 21st. So on the 21st, which is here. 21st, we got our first expansion into an uptrend. We go to the 4-hour. It's probably in a box. Let's see. 21st is where? Here. So kind of chopping around, but we did get our expansion there. 21st is still green, right? But obviously it's going to start chopping because it's coming to that liquidity line right here. So this is probably something you want to have been aware of. But as long as it's green, we're going to be looking to get the low of the day, right? So as you can see, the 21st was this day right here, which is Tuesday into Monday into Tuesday. So we would have been looking for the low day. Asian session range right here. It comes down, still goes into a box. We wait until it gets outside the box, even though it's in the London session, right? We're not going to take any positions until we find out it's the low of the day. So as you can see, this was our first line here. We would have got in 18 pips. We would try to get 18 to 30, right? We would have got stopped out. We probably would have opened up 2 positions there. So 2 positions, so we probably would have lost, 25 pips. So we lost. So apparently that wasn't the low of the day because as you can see, got our new expansion to the downside, stopped us out, but it wasn't able to break the slow here. So as you can see, it wasn't able to break the slow, plus you get a new expansion to the upside. You could have went super heavy right here. Super heavy right here, right? You could have went super heavy right here. And you could have made all of that back, right? I mean, this ATS system is just amazing, man. I mean, it's crazy. You can make so much money. So this was 26 pips. So we would try to at least get 50, right? So as you can see, boom, we would have got 56 pips, right? That would have been our stop. We probably would have opened up 5 positions here. So we probably would have made, 200 pips this day. We would have lost, I don't know. Let's see. We would have lost 14. So that's probably what, 2 positions. 14. The stop was, let's just say the stop it was 20. So let's just say you would have lost 40 pips, but you would have made 200 pips this day. Easily 200 pips, right? So the next day, right, goes into a box, right? We know it's still green right here, green right here. So we're going to be looking for, again, the low of the day, right? So as you can see, it comes down. London opens up. You get your first expansion here, which is right on the edge. You could have took it, though. Could have took it. Your take profit would have been, what, 20 pips, right? Boom. It didn't go up. Came back down. Stopped you out. You would have lost 20 pips. You probably would have only opened up 1 position, right? So, yeah, you would have lost 20 pips, right? So as you can see, it wasn't done with the low. It made its new low right here, right? Made its new low. And then it came back down, retested that low, didn't break it, right? And then boom, you got a new expansion line. So guess what? You could go super heavy again. So your take profit's going to be what? 46 pips. So say if you would have got that, boom, you would have got, you would have got a lot. So this could have been another 200 pip day, right? So again, it goes on and on, man. It goes on and on. As long as you're trading the low of the day, you should be good regardless. So let's just recap. So what you're gonna do is your trading plan is based off the high or low of the day, based on your directional bias. So if your directional bias is long, you're gonna be looking to buy the low of the day. If your directional bias is short, then you're gonna be looking to sell the high of the day, right? The time frames that you want to have the daily, the 4-hour, the 15, daily, 4-hour. So daily is your directional bias, 4-hour is your confirmation to the directional bias. This, when these turn red, that means that your daily is some type of resistance, right? So this is allowing you to get out. Your 4-hour, your entry is going to be your 15-minute, but you're only going to enter in the Asian session, in the London session, right? And you only enter based off an expansion line. So you probably could have entered in right here, right? Your stop would have been what, 50 pips, which obviously that's a huge stop, so I probably wouldn't have done that. But you got to figure all this out. This is the trade that you want. This is an ideal setup right here, right? Asian opens up, comes, hits the low, doesn't able to take it out, hits the low again. As you can see, these are like M setups, right? Are like a head and shoulders, right? You have your shoulder goes back up, and then you have your other shoulder. I guess not head and shoulders. I guess it's like a M and W's, right? Doesn't take it out, go super heavy, right? Come back here. As you can see, we had no expansion to the downside, which the first one you got around 8.45, which is pretty much at the end of your trading day. So you probably would have took this trade anyway. But let's say you did. 50 pips is a huge stop, so I probably would have went here. Would at least get 20 to 40 pips. Let's see if you would have got that. You would have been right at the cusp, but you probably would have got out that trade right here because it's the end of the day, so you would have made 19 pips, right? Same right here, you're looking for the low of the day, which as you can see, Asian session comes out, goes into the London box. You could have took this right here, which is 20 pips. You probably only entered in one, maybe two positions. So let's just say you lost 15 pips, or you lost 25 pips. And then right here, you enter in right here, which is around 25 pips. So you're going to be going for 50. So your take profit, I probably would have got out of this trade right here with 30. Probably would have been a break-even day, but you could have held on, and you could have got your 50 pips, right? Same here. And this is today, so this is Sunday into Monday, which you're not going to trade this anyway, and this is Friday, so you probably would have got out right here with a break-even trade. So, sorry, man, for making this video so long. Let's just recap, man, so you can write it down. So, step number one, you're going to be trading the high and low of the day, right? The charts you're going to need is you're going to need your daily, your 4-hour, and your 15-minute. You're only going to be trading, your directional bias is going to be based off your daily, right? So the things to confirm your directional bias is it has to be above or below expansion with a matching Heikin-Ashi candle. So if it's above expansion, the candle must be green from the previous day, right? Then next is your confirmation chart, which is going to be the H4. H4 is going to allow you, it's going to give you a couple candles before the daily turns red to get out of the trade. So if the daily is green, right, but the last couple candles are red, it could be going into a box. So if the 4-hour is not directional, if it's not in sync with the daily, when you enter into the trade on your 15-minute, then you're not taking that trade, right? Your 15-minute is going to be your entry. Plus, you're going to have to make sure that you get these boxes right here. If you want, let me know. I can send them over to you. You're going to want to trade only London session into New York, right? Get out once it gets out the box, because usually that's when price comes back down, whips down, and it just does its own thing, goes into an Asian range, right? Because in my time, this is London into New York right here, right? So London starts at 1 o'clock my time, and then it ends around like 11, right? So this is around 10, 11. As you can see, no momentum, no volatility, right? Goes down. Step number 3, confirmation is the 4 hours. So let me see. So your entry is based on the session and expansion. So it must be within the gray box, London into New York, must get an expansion into directional bias. So you don't take a trade unless you get a green line, right? You could have took this trade here. Obviously, you got the dip. You're like, yeah, it made the new low right here. You see some expansions, but it's been occasions where if you don't get this right here, this is your entry. This is your trigger. If you don't get this trigger, you don't pull the trigger, right? You don't get into the trade, right? Just increases your odds, right? And number 2, money management. You do your own thing with your money management, man. But I mean, as long as you place a stop and you do 2 to 1, or you could do 1 to 1. 1 to 1 is very successful. Um, 2 to 1 just allows you, just because there's going to be some of those days where you lose based off of how you stack your positions into the trade, because sometimes that's not going to be the low, right? It wants to whip back down, take some more people's money, right? Because people like to buy the breakouts, and there's liquidity. I mean, these lines are liquidity, so this is where money is, right? This is where money's sitting. They're going to come down, take the people that are going short, right? And then they're going to take their money. So yeah, so that's the process, man. I'm sorry this video is so long, but I feel like, it had to be this long so that you could really, I mean, if you have any questions, let me know, man, because I'm definitely not, good at explaining videos and the way that I trade. But if you have any questions, let me know. I think this is a very successful rate. I mean, a lot of people like to trade the high and low of the day. As you could go back to just go, my friend, go back to your a naked chart, and you can look at the candles, right? Because you can see the open was here, came back up, touched the high, and then obviously if it's a green candle, then that means that's the close. But it's easier it's easier with the bar charts, because you can see exactly where it opened and where it closed, right? And as you can see, each day there's going to be a high, there's going to be a low, high, 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 a low, everything. So just remember that, and as long as you're in the direction, you're going to be looking for the high, right? Or if it's going down on the daily, you're going to be looking for the low, right? So yeah, that's pretty much about it, man. Hiking Nashi is really dope because it allows you to stay within the trend, right? Because obviously when the new days open up, the candles themselves are red or green, right? They turn color based on where the high and the low, where the position is currently in the price. So yeah, just pay attention to that, and I think you should be good, man. But let me know if you have any questions. Like I said, sorry this took so long, and let me know if you're confused about anything. All right, cool. Later.